Hello and welcome back to the Business Career College Continuing Education course series. My name is Colin Johnson. Today I'm going to be taking you through a course on FINTRAC and your reporting obligations under FINTRAC. I am Director of Operations at Business Career College, so I manage the fixed operations here as well as the human resources capacity. So while we do not specifically have a FINTRAC reporting requirement, which we'll talk about shortly, I am familiar with the types of compliance requirements that businesses face. I look forward to taking you through this course. As you proceed through the course, there will be questions that come up on your screen for you to answer. And if you correctly answer 6 out of 10 of those questions, you will be able to be awarded continuing education for this course. It is a 1-hour course, so welcome and let's get our day started. We'll start out by looking at an overview of what FINTRAC is. So FINTRAC's full name is the Financial Transactions and Reports Analysis Centre of Canada. That is quite a mouthful, so we will refer to it as FINTRAC, and that's how you'll see it referred to throughout the industry as well. FINTRAC is authorized under the Proceeds of Crime, Money Laundering and Terrorist Financing Act. That is a federal act in Canada, so it gives them jurisdiction across the country. And their mandate is to facilitate the detection, prevention, and deterrence of money laundering and the financing of terrorist activities while ensuring the protection of personal information under its control. Now, really, that's 3 parts to their mandate that we'll look at today. The first part is the detection, prevention, and deterrence of money laundering. So with that, we're going to look at a lot of ways that money is handled and what volumes of money being transferred have to be reported. The second part is about deterring financing of terrorist activities. So that's more specifically where we'll look into suspicious types of transactions or suspicious behavior of your clients. And then the third part is ensuring protection of personal information under its control. We won't talk a lot about that today because we do offer an entire course on personal information protection. However, we will talk about the exceptions to that personal information protection legislation that exist under FINTRAC. When we start to look at who reports to FINTRAC, we're talking about what's called a reporting entity. So any group or individual that has a responsibility to report to FINTRAC is called a reporting entity. That will be an important piece of terminology to remember throughout this course, as we will use it quite frequently. So let's talk about who a few of the reporting entities are. We'll start off with financial entities. So these are banks, credit unions, and Caisse Populaire. Then secondly, the next one is life insurance companies, brokers, and agents. Now that's the category most of you are going to fall into. So we're going to spend some specific time looking at the requirements of that group in this course. There's also reporting requirements for securities dealers, money services businesses or payday lenders and that sort of business have requirements to report under FINTRAC, as do agents of the Crown that sell money orders. Accountants and accounting firms have some specific requirements, as do real estate brokers, salespeople, and developers. There are some specific requirements for casinos that we'll look at today. Dealers in precious metals and stones are also regulated under FINTRAC, as are public notaries. Now, also, anyone that's an employee of the above types of agencies could and would have reporting requirements under FINTRAC, depending on specifically what their role with those companies are. A lot of the common themes that we're seeing here are entities that would deal with large amounts of money or large transactions. So real estate brokers and dealers in precious metals and stones are selling things that have a high cost. The financial entities like banks, life insurance companies, and securities dealers also can deal with large amounts of money. And then when we're looking at services like check cashing or issuing money orders, those could also be in large amounts. And that's a way that individuals can move money from one area to another. So that's why there's some requirements around that. So we'll shift into the types of reporting that is required under FINTRAC next. So generally speaking, there are 5 types of reporting that we're going to look at that are required under FINTRAC. The first is perhaps the most general of the categories, that's suspicious transactions. The next is large cash transactions. Then we're going to look at electronic funds transfers. Then, as I said, we're going to look at casino disbursements. And finally, we're going to look at terrorist property. Now, when we consider these transactions, there are 2 broad types of transaction here. There are transactions with very specific reporting requirements around the amount of the transaction. That would be large cash transactions, electronic funds transfers, and casino disbursements. And then there are the other 2 categories that really are around behavior. So suspicious transaction and terrorist property is more generally around behaviors that you would observe and then report. When we look specifically at suspicious transactions, what this is a category where the reporting entity, that's you, suspects that there's reasonable grounds linking the transaction that they're processing to money laundering or to terrorist financing. So as I said, this is more about reporting behavior than a specific amount in this case. And there is no single indicator of what this is going to look like. It's just generally some sort of behavior that's unusual for this client or is unusual for your business. So if, for example, you're an insurance broker that specifically deals in life insurance policies, and that's all you've ever dealt in, and then you have a client that is suddenly wanting several disability policies, and specifically wants to buy those policies from you, there are a couple of unusual behaviors that you would note there. One, it is unusual for you to sell a disability policy. It's not something you really ever do. And secondly, this customer has never bought a disability policy from you before, so you may want to look a little more closely at the transaction. Another way we could view this is if you have a customer who has regularly had you looking after their insurance needs, and suddenly their insurance needs have changed drastically, and they can't give you any reason why there's such a drastic change that's needed, that might be considered suspicious, and it may be something that you would want to consider reporting to FINTRAC. Now, because this is a more general transaction, you are going to want to be very specific in the type of reporting that you do and report every detail that you're considering that is making this seem like a suspicious transaction for you. The next type of transaction that we're going to look at are large cash transactions. So when we look at this generally at first, we see that there are 2 parts to this type of transaction, that it's a large transaction and that it's a cash transaction. So looking at that more specifically, what FINTRAC means by large is an amount over $10,000. And by cash, they mean something handled in cash, not by other monetary means. So to be a large cash transaction then, what we would see is a single cash transaction of $10,000 or more. That must be reported to FINTRAC. Or if there's a combination of transactions from that one client in a 24-hour period that total $10,000 or more, that also must be reported to FINTRAC. So if a client comes in with a cash transaction of $7,000 and then later comes in with another cash transaction of $3,000, you would still report that to FINTRAC even though both those transactions are under $10,000 because they add up to a total of $10,000 or more. These transactions do need to be reported within 15 calendar days of the transaction. So that's a little more than 2 weeks that you'd have to report this. The exceptions to this rule are very limited, but if you are receiving the funds from a financial entity, that's a bank or a credit union, or if you receive the funds from a public body, like a provincial or federal government, or a department of the provincial or federal government, a municipal body, so your city government or a department of that city government, or a hospital authority. So a hospital authority is the foundation that's set up to fund a hospital. So if the money comes from any of those types of entities, you would not need to report that. And the primary reason behind that is they are another reporting entity who would already have reported the source of that financial transaction. So again, the key points to remember when we're looking at a large cash transaction is we're looking at transactions over $10,000, and that's one transaction of $10,000 or several transactions in a day adding up to $10,000. You need to report them within 15 days of when they happen, and that there are a couple of exceptions to that rule, usually when you're dealing directly with another reporting entity, specifically a bank or a government. The next type of transaction that we're going to look at is called an electronic funds transfer. Now, just like we were able to break down what a large cash transaction is, we can assume a little bit from the name of this that an electronic funds transfer is a transaction when money or funds are moving electronically between individuals. This is the newest type of reporting that FINTRAC requires. The regulations around this were put in place in January of 2015. And again, with electronic funds transfers, just like with a large cash transaction, we're looking at amounts over $10,000 in a single day. Again, just like a large cash transaction, if these electronic funds transfers are multiple transfers in one day that add up to $10,000, they also have to be reported. The key difference between this and a large cash transaction is that this is a type of transaction that's considered around cross-border movement of money. So we're looking at money that's going out of Canada electronically or coming into Canada electronically. Now these transactions, because they're large in nature and they're moving across borders, are also shared with the Canada Revenue Agency as part of the Canada Revenue Agency's work to prevent tax evasion. So you don't have to worry about additional reporting here. When you submit an electronic funds transfer report to FINTRAC, the information is automatically going to be shared with the Canada Revenue Agency. Now, when we consider what an electronic funds transfer might look like, that could look like a SWIFT transfer at a bank out of the country or into the country. That could also be any sort of electronic money transfer where, like an email money transfer, where you know the recipient is someone outside of the country. Or when your customer is receiving money by email money transfer from someone outside of the country and it's over $10,000. I want to take a few minutes here to give you a real-world example of where we see FINTRAC violations. There aren't a ton of FINTRAC violations to look at in Canada, but this is one of the higher profile violations that I'm going to talk to you about. So in 2014, FINTRAC was doing an audit of a Canadian-based bank, and it found that there were over 1,000 unreported wire transfers of $10,000 or more. So if we're looking at our electronic funds transfer reporting regulation, we know that because it's over $10,000, if that money is going out of the country or coming into the country, each of those transactions would have to be reported to FINTRAC. Now, this investigation started with when a client of the bank was being investigated for financial crimes in the US. So FINTRAC started to look into it as well, and they saw that these unreported wire transfers were going to the United States. Not all of these wire transfers were around this one client that was being investigated, but once they opened the investigation, they saw that there was a very serious issue here. The bank, in response to the violations, claimed that it was the lack of reporting was due to different interpretations of the regulations. So what we can take as a lesson in this situation is that we should try as much as possible not to interpret what the regulations are saying, but look directly at the fact of what they're saying. So when we look at an electronic funds transfer, we are looking at three things, and those three things are what trigger reporting. So we're looking at the money being sent electronically, we're looking at amounts over $10,000 or more in a single day, and we're looking at them going into Canada from another country or going out of Canada to another country. In this case, when we look at this real-world scenario, what we can see is that this situation would meet all three of those requirements, so you are bound to meet your FINTRAC reporting requirement in this situation. We'll move on to the next area of FINTRAC reporting, which is around casino disbursements. So, as you would assume by the name, this is something that's only going to happen at a casino. And a disbursement is any time that you're providing funds. So specifically, when a casino disburses or gives out $10,000 or more in a single transaction, it needs to be reported to FINTRAC. So again, we're looking at a regulation similar to the large cash transaction and the electronic funds transfer because it's a $10,000 amount. Just like those other two types of reporting, when a casino disburses more than $10,000 in two or more transactions to the same client in the same day, it also needs to be reported to FINTRAC. Now, there's a variety of situations that this applies to. With casino disbursements, it can be any method of payment. It doesn't have to be cash or electronic. It could be either of those. It could also be dispersing funds in the form of a check or any other monetary instrument. It specifically applies to the redemption of slot tickets, chips, or tokens, so proceeds of gambling, front cash withdrawals, safekeeping withdrawals, or cash advances of any kind. It also includes lending against a check, payment on a bet, payment from a slot jackpot, or payment received from credit. Also, it applies to when a check is being cashed or any other negotiable instrument is being cashed. So again, just to review this, we're again looking at $10,000 or more in one or more transactions in a casino, but it can be dispersed in any form. The final reporting area that we're going to look at before we move on to our next topic is around terrorist property. So reporting entities have to submit a terrorist property report if they have property as described on this slide in their possession or control, or if they suspect that there's terrorist property being presented to them. So this would be property that they know is owned or controlled by or on behalf of a terrorist or a terrorist group, or effective 2008, that they believe is owned or controlled on behalf of a listed person. Now let's specifically look at those two categories of people that we have to report. So a terrorist or a terrorist group includes anyone that has as one of their purposes or activities facilitating or carrying out any terrorist activity, and it also includes anyone on a list published by the regulations establishing a list of entities that's part of the criminal code. A listed person includes anyone on a list published in the regulations implementing the United Nations resolutions on the suppression of terrorism, which is part of the United Nations Act, and it means they're believed to have carried out or tried to carry out or helped with a terrorist activity, or it also includes if they're controlled, either directly or indirectly, by an individual or entity conducting terrorism. We'll put a link on this page in a moment that allows you to take a look at listed persons and terrorist entities and terrorist groups. But keep in mind that a terrorist group or listed person can be an individual, so it can be an actual person, it can be a corporation or a group, or it can even be a monetary fund. They don't have to be legally incorporated to be considered a terrorist group. It's just any organized individual or group of individuals carrying out the acts we listed above. The next concept that we're going to cover is around what's called a politically exposed person. This is another reporting requirement under FINTRAC, specifically nested under the idea of terrorist property and financing of terrorist property, and also under suspicious transactions. So this is a person that's in a prominent position in a company or an international organization or in government who has the opportunity to influence decisions and control resources. So that is where the exposure comes from. Because this person has the ability to influence decisions or control resources, terrorists or other organizations may try to use their control through threats and other means to influence that control over resources or making decisions. It's also an effort to curb corruption. That's primarily the reasoning behind this, is to curb corruption. So because of that, FINTRAC requires tracking of these individuals. Usually the specific tracking that's required is in FINTRAC's directives to each industry. So in a little while, we're going to talk about how this impacts the life insurance industry specifically. So FINTRAC is concerned with the information specifically about politically exposed persons from other countries, or as they call them, politically exposed foreign persons. When there is reporting around a politically exposed person, there is a 30-day period for you to submit that. So those reports do have to be submitted within 30 days of the incident happening. When we look at privacy and FINTRAC's regulations around privacy, we'll first look back to their mandate, and part of their mandate was protecting the information that's under their control. So they will protect that information in the same way that you, as a private business, typically are required to protect information that you collect under your privacy regulations. Typically, it's going to be PIPEDA that applies to you, and that still applies anytime you're collecting information. However, in regards to FINTRAC regulations, this does create an exception to the sharing of private information. When you are doing FINTRAC reporting, even though you're sharing someone else's personal information, you do not need to inform the individual that you're sharing information about them to FINTRAC. It is, in fact, very important that you not inform them, because there are situations where it could be interpreted that you're trying to help them evade FINTRAC reporting if you tell them about the reporting you're doing. We'll see later that that can carry some very steep fines, and we want to try to help you avoid those. So the advice that we would give is when you are doing your reporting FINTRAC, not to tell the client that you're sharing their information, as you do have the exemption under FINTRAC that you don't have to share that information. Now, let's take a look at how FINTRAC reporting works specifically in the life insurance industry. We know that most of our clients that we're using this continuing education requirement do work in that industry in one capacity or another. So some of the specific requirements are that there are 3 reporting areas that life insurance industry people are required to report under. The first is with regards to suspicious transactions. So again, this is when a behavior of your client or a difference in the way you do business seems suspicious and seems like it might be involved with money laundering or with terrorist financing. So again, when we think back to some of the examples of suspicious transactions that we looked at, if you have a client whose insurance needs you've been looking after for many years suddenly and their needs suddenly change and they can't explain why there's a change in the needs, it may be that there's something suspicious going on in this situation to report to FINTRAC. And as we saw from our real world example, if there is something you think is suspicious, it is better to, as they say, be safe than be sorry. So if you think something's suspicious, you should report it as suspicious. The second reporting requirement that individuals in the life insurance industry have is around terrorist property. So when you have property come into your possession that you suspect is terrorist property or is being used by terrorist or listed identities to finance their activities, or if this is presented to you and you don't complete the transaction, you would want to report that terrorist property to FINTRAC. The third area that individuals in the life insurance industry are required to report on is large cash transactions. So again, as we said before, these are transactions made in cash, which is likely fairly unusual for you in the life insurance industry. I suspect you don't often get clients paying in cash for their policies. And so if that payment is $10,000 or more in a single transaction, or if the client tries to make multiple transactions in a single day that add up to $10,000 and those are in cash, then you have a reporting requirement around this as a life insurance industry person under FINTRAC. Your company in the life insurance industry has specific record-keeping processes that will keep them compliant with FINTRAC's requirements. So anytime that you are encountering activities with your clients that could be suspicious or could involve terrorist property or involve a large cash transaction, you need to keep the paper trail of those transactions so that you can prove what's happened. You also have to have processes in place for determining who your clients are. So this is particularly important when you look at making your FINTRAC reporting for the first part. So you'll need to know who you're reporting about in a FINTRAC report. And then it also becomes important when we look at the life insurance's politically exposed foreign person regulations. So for both of those reasons, it's important that you have a set process in place, how you identify your clients when they're making transactions for you. The politically exposed foreign person requirement under in the life insurance industry is if you have someone purchasing an annuity of more than $100,000 and you expect that money, or you suspect that money, rather, is coming from a politically exposed foreign person, then you do have to report that through FINTRAC. This goes hand in hand with the idea of the third-party determination. So the third-party determination is when you suspect the money your client is giving you is coming from another person, you need to report that as a suspicious transaction. So what's really critical here in the life insurance industry, outside of the 3 types of reporting you need to do specifically, is that you really need to understand where your clients are getting the money that they're using to pay for the policies that they're purchasing from you. If the money is coming from a third party or from a politically exposed foreign person, then there's some additional reporting requirements for you under FINTRAC. Let's shift gears now and look rather at how you're going to report to FINTRAC. Now, there are some very specific ways that this reporting works that you will want to be familiar with. In many cases, the company you're working for will have set this up already, but in case you end up working on your own or working in a company in a role where you need to monitor this, we'll go over exactly how the reporting with FINTRAC works. First and foremost, in almost all cases, electronic reporting is required by FINTRAC. The only exception to that is if your business does not have an internet connection. If you don't have an internet connection, then there is paper reporting available to FINTRAC, but that is becoming increasingly rare, and I suspect that if you're completing online courses for your continuing education, that won't apply to you. So we're going to focus specifically on the electronic reporting requirements that FINTRAC uses and the methods that they have in place. When we look at the electronic reporting tools, there's 3 primary options as to how you can report. They're the F2R system. The F2R system is sort of how you would do direct individual reporting to FINTRAC. And the other 2 systems are also based on F2R and use it to some degree, so we'll go over that in a little more detail. The second system is called the batch system. That's primarily in place for those reporting entities who do large numbers of FINTRAC reports. And then the third one that we'll talk about is called a service provider agreement. This is a way of transferring some of the FINTRAC responsibilities onto another entity to do on your behalf. So the F2R system is an online application accessed over the internet, and it's a secure application that's been developed by FINTRAC. It allows you and your company to report suspicious transactions, large cash transactions, electronic funds transfers, and casino disbursements, as well as terrorist property. There is no cost for using F2R, as this is a mandatory reporting process, so FINTRAC did want to reduce the barriers of reporting as much as possible. What F2R allows its user to do is manually submit reports one at a time. It also lets you make modifications or changes to those reports if necessary. It allows you to manage the location of your reporting entity, so the physical address of where you're located, and the contact information of whoever the contact for FINTRAC is, should they require any follow-up information. The third thing that allows you to do is it also allows you to delegate reporting to a service provider. So that was one of those other provisions that we talked about specifically. It's talked about generally, and we'll talk about more in specific in a moment. The second method of using F2R, or reporting to FINTRAC electronically, is the batch system. The batch system, as I said, is designed for those reporting entities that have many FINTRAC reports to do on a regular basis. There isn't particularly a limitation of who would be able to use this, but because it is an additional software system, it'd typically be most suited for large organizations that probably have an IT person that could help with any problems that may arise with the batch system, and can also help set up and install the software that's going to be used. It is a more involved process than using F2R directly for your reports, and has a more involved setup process. The setup process basically involves 4 additional steps. So you need to register for an F2R account for the batch system. Then you as a reporting entity have to apply for a certificate to be a person that can submit batch reports. Once you have that certificate, then you have to have the batch software that FINTRAC will provide installed on your systems at your organization. Once that software is installed, you have to complete the certification by submitting a report through the batch system. When you're using the batch system, you can make individual corrections through the F2R system directly, but it is expected that you'll use the batch system for all of your submissions. So you shouldn't be submitting FINTRAC reports directly through F2R. Once you install the batch system, you should be using it for processing those transactions. The third option for electronically reporting to FINTRAC is called a service provider agreement. In reality, this isn't incredibly different from either of the 2 options that we've already discussed, the F2R manual input and the batch system. What this really is transferring that reporting responsibility or the reporting data entry onto another organization. So there are organizations out there that will take all of the information you collect regarding suspicious transactions and other reporting that needs to happen to FINTRAC, and they will make those entries for you, either using direct entry through F2R or by using a batch system that they may have in place. So you, as a reporting entity, are still responsible for collecting all of the information on suspicious transactions that may be happening in your business, but the service provider would be the one submitting them. It's also important to note that you still have to have an F2R account to authorize this service provider, and it's still your responsibility to maintain the information about your location and about your contact person in the F2R system. The real benefit of this is if you are perhaps a mid-sized business that does lots of FINTRAC reporting but doesn't have the personnel to maintain a batch system, you could contract this service out to someone else to make it more efficient for your organization. We've talked a lot today about mandatory FINTRAC reporting. Now we're going to talk a little bit about the few types of reporting to FINTRAC that are voluntary. So really, there are 2 types of reports we're going to talk about in detail. The first is if you suspect something should be reported to FINTRAC that we've discussed already, but you're not a reporting entity or don't have a reporting role at your entity. And secondly, we're going to talk about reporting suspicions of non-compliance with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. So if you think a reporting entity isn't meeting their requirements, that's the second type of reporting that we're going to talk about in detail. If you suspect that a transaction you observed involves money laundering or the financing of terrorist activities, you can report this to FINTRAC, even if it's not one of the categories that require reporting, and even if it's not in an industry regulated by FINTRAC. So if, for example, you work at a car dealership and someone comes in to pay for a car in cash and it's more than $10,000, you could report that to FINTRAC as a suspicious transaction or as a large cash transaction. Because you don't have a specific reporting requirement here, you wouldn't report this through F2R, but you would go to FINTRAC's website directly and enter the information in the web form that they maintain for voluntary reporting. This will allow you to help curb terrorist financing and financial crime generally, but as you aren't in a regulated industry, there isn't a specific requirement for you. The second type of voluntary reporting that we mentioned is when you suspect somebody's in violation of FINTRAC regulations or in violation of the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. So if you observe a transaction that you think is suspicious and you don't think an organization is reporting it, or if you're a former employee of an organization and you know that they're not reporting their transactions, these are two situations where you could report the reporting entity for not following their requirements under FINTRAC. You can file these reports to FINTRAC by fax or mail. They do not accept these reports electronically or by phone. They do need them in writing. And once they have this report in writing, then FINTRAC will take over the investigation and determine whether there is a violation as they're investigating that complaint. There are quite a few benefits built into the FINTRAC reporting to show why it's beneficial to report to FINTRAC. So, for example, you're helping prevent financial crime. By preventing financial crime, you're making your business and Canada a safer place. By preventing terrorist financing, and by preventing money laundering, you're making the purchasing system easier for yourself. But FINTRAC does also have some penalties that they can use to help encourage compliance with their regulations. Broadly speaking, there are two types of penalties for non-compliance with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. So we have criminal penalties. So those are penalties pursued under the Criminal Code of Canada through the court system. And then there are administrative money penalties, which are assessed directly by FINTRAC to encourage compliance with a non-criminal type of encouragement, or discouragement rather. Although both types of penalties are available as a tool for FINTRAC to use to encourage compliance, only one type of penalty can be applied to each instance of a violation. So what I mean by that is that if you do end up having a violation of FINTRAC's regulations, then FINTRAC can assess either a criminal penalty or an administrative money penalty, but not both of those types of penalties. We'll start by looking specifically at criminal penalties. Originally, criminal penalties were the only type of discouragement that FINTRAC had around non-compliance. They are now accompanied by that second category of penalty. But because it's a criminal penalty, FINTRAC does have the authority to disclose cases of non-compliance to law enforcement, especially in cases where there's extensive non-compliance. The nature of the penalty does depend on the severity of the infraction, but some of the penalties that can be included is up to $2 million or 5 years in prison for failure to report a suspicious transaction. When we're looking at large cash transactions and electronic funds transfers, the penalties can be up to $500,000 for a first offense, or for a more severe offense, up to $1 million. If you're not meeting your record-keeping requirements, and this will typically be found when FINTRAC is doing an investigation, in that case, again, you can be fined up to $500,000 or 5 years in prison. If you fail to provide assistance or information during a compliance examination, you can be fined up to $500,000 or you could have 5 years imprisonment. The last penalty we're going to talk about is around disclosing the fact that a suspicious transaction report was made or the contents of a report with the intent to prejudice a criminal investigation. That can bring up to 2 years in prison because you're interfering with a criminal investigation. That's why earlier when we were speaking about privacy, we encouraged that you never disclose or try not to disclose that you're reporting information to FINTRAC because it could be interpreted at a later date as interfering with a criminal investigation. And you don't want to be in a situation where you could be assessed jail time because of sharing information that you had no need to share. As I said before, originally only criminal penalties existed or were able to be pursued with under FINTRAC, but as of December 2008, FINTRAC was given the authority to issue administrative money penalties to non-compliant reporting entities. That is an alternative to criminal penalties. So again, you can't be assessed both an administrative penalty and a criminal penalty. And the administrative money penalties exist specifically to be a non-punitive way of enforcing FINTRAC and encouraging or reporting entities to do better reporting. When an administrative money penalty is being assessed, they look at 3 primary factors. They look at the harm caused or the nature of the infraction. So whether it's a single small infraction or a single large infraction or multiple infractions. Then they look at compliance history. So is there a history of breaches of FINTRAC reporting, especially ones that have been investigated and that the entity has been instructed to correct? And then they look, like I said, at the non-punitive nature of the penalty. When they say non-punitive nature, what they're talking about is they want the penalty to be severe enough that it will encourage the reporting entity to take FINTRAC compliance seriously, but they don't want it to be so severe that it will cause undue financial hardship on the reporting entity. Because if a reporting entity is under undue financial hardship, they may go out of business or may not have the capacity to complete their reporting requirements. When we look at administrative money penalties, they can be as high as $100,000 to an individual or $500,000 to an entity or a corporation. So that's still a fairly steep penalty, but when we compare it with the criminal penalties, it's much less extreme because it is, as we said, designed to encourage compliance rather than to punish violations. We're going to take some time now to look at best practices that you, your company, and your colleagues can use to encourage compliance so that we can, 1, create a situation where we're reducing financial crime, and 2, so that we can avoid those penalties that we just talked about. There are 4 compliance best practices that we're going to talk about today. That doesn't mean they're the only best practices. It just means they're where we're going to focus today. I encourage you to have discussions with your colleagues to think about other new best practices. The first one we're going to talk about is how you can use your Know Your Client or KYC requirements to help you report better to FINTRAC and to make sure that you're meeting your obligations there. The second is about building a compliance system in your organization and some of the small or routine things that you can do to encourage everyone to be compliant. The third thing is attaching meaning to that compliance system once you've created it. So ways that you can really get a deep commitment to compliance. And the fourth area we're going to look at is around ongoing learning and how having ongoing learning as part of your organizational culture can help with compliance both to FINTRAC and other regulations that are out there. So you already have KYC requirements on you, either under CLIA guidelines or perhaps under other regulatory bodies, depending on what types of products you sell. When you're doing your Know Your Client routines, you're collecting significant amounts of information about your clients and about the transactions that they're doing. So this can really set you up to be in the best position possible to do your FINTRAC reporting. So specifically when we look at your KYC requirements, this is going to let you know what's normal behavior for your client and what normal activity for your client is going to look like so that you'll be easily able to spot unusual behavior or unusual activity when it arises. So when we again look at the earlier example that I gave of a client that's been getting his insurance needs met through you for many years, and suddenly those needs are changing, through your KYC conversation, you're going to be able to find out why those needs are changing. And if nothing in that conversation is pointing out why those needs are changing, you'll know that it's unusual for your client. So specifically, this is going to help you identify suspicious transactions. So those are transactions that are unusual for your client and might involve money laundering or terrorist financing. It's going to help you with your third-party determinations that we talked about. So it's going to help you figure out where the money that your clients are using to purchase policies is coming from. And if it is from a third party, you'll be able to report that. Because you're getting to know your clients, you may also get to know if they have relationships with politically exposed foreign persons, or if they themselves are politically exposed foreign persons. And the KYC requirement is also one of the best ways that you can meet the FINTRAC requirements for life insurance salespeople of verifying their client's identity. The second best practice that you can adopt is to build a compliance system. So if you're a senior leader in your organization, you may have a lot more impact on this, but even as a regular person in the sales force, you can take some of the pieces that we talk about here and integrate them into your daily work to help you be more compliant with FINTRAC regulations. So really what a compliance system is it's about making your processes part of your regular business. So it may be something as simple as creating a list or a form or a checklist that includes the information that you'll need to report to FINTRAC through the F2R system. That would be the best way individually you could impact your results. If you're looking at the organization level, you may want to look at making one person responsible for compliance in your office or for your company, depending on the size of the organization. And then that person and everyone in the organization would hold everyone accountable to the compliance regime that's in place or the compliance system. When we look at specifically how this is going to help you and your organization, this is going to help you with things like reporting accurately, because if you have that checklist or that form that we talked about, you'll be taking notes that you can then put into the F2R system. Establishing a routine will help you report on time. So if you do your FINTRAC reporting every day in the last half an hour of your day, or every day at a certain point in your day, you will get that done on time and you won't miss those timelines that we discussed. like the 15 days to meet a large cash transaction or the 30 days to disclose terrorist property. And the third thing it's going to help you with is your record keeping requirements. Much like how the checklists would help you keep your information accurately and make accurate reports, that's also going to feed into your record keeping system. So by doing a few simple things here, you can really strongly impact building a compliant organization and encouraging compliance throughout your organization. The third area we talked about is attaching meaning to the compliance system that you build, or building a culture of compliance is another way of saying that. So attaching this meaning allows you to get more people on board with compliance. A big part of that is understanding the impact of non-compliance. So if you're an owner of the business or a senior partner, you want all of the frontline people to understand what the financial and the non-financial impacts of non-compliance are. So you may want to review what the financial penalties both to the organization and to individuals will be if you're non-compliant, because each of those things may encourage people in different ways. You want them to believe in the success of the business, and penalties against the business will obviously make your business less successful, but you also want to know that they have a personal stake in compliance when you look at those financial penalties. Non-financial penalties can mean a couple of things. For this, we could be looking at the criminal penalties where jail time can be assessed. That's a non-financial penalty that's definitely going to have a financial impact. So if they understand that jail time is involved, they could be quite motivated to stay compliant. Additionally, though, you can focus on the non-financial benefit of compliance, in that no one wants a system where we have extensive financial crime that's causing an unsafe financial market. The fourth best practice we're going to talk about today is ongoing education in your organization. Ongoing education is a best practice on its own, and it's also going to impact some of the other best practices that we talked about. Ongoing education can be simple things like incorporating FINTRAC learning into everyone's learning process in your organization, or it could be as simple as you choosing a couple of times a year to review the FINTRAC regulations so that you're always on top of the existing regulations and so that you know if there are any new regulations or changes to the regulation. As we saw in that example earlier where FINTRAC fined one of the major banks in Canada, not understanding the requirement properly is no excuse in FINTRAC's eyes for not following the requirement. It could be something more major, like a company-wide review of all of the regulations, where you get a bunch of people together in a room and make a presentation, or perhaps you launch an e-learning module like this one that everyone is required to do on an annual basis. And it could be smaller, more informal learnings about FINTRAC throughout the year. So you could focus on one aspect of FINTRAC if you wanted to do some technical information. So quarterly, you could look at each of the reporting requirements. Or it could be more informal learnings like reviewing case studies like we did with that major bank that we talked about earlier. That and making this a regular process is going to bring the learning into your world and into the world of all of the staff at your organization. And by bringing that learning into their world, it makes it more relevant, more accessible, and more realistic for them. As I said, this on its own is good, but by regularly reviewing FINTRAC, it's going to help with that culture of compliance that we talked about, because when someone regularly reviews FINTRAC, they will better understand the financial and non-financial impacts of FINTRAC. If some of your learning is around the compliance system itself that you've built, it's going to help that system be more successful as well. We're going to wrap up today with a review of what we've talked about. So we talked about what FINTRAC was and who has to report to FINTRAC, or who is a reporting entity. And we revealed all of the kinds of reporting entities in some level of detail. Once we've built an understanding of who reports to FINTRAC, we then moved into what types of transactions need to be reported to FINTRAC. We further explored a couple of more specific requirements under FINTRAC around for politically exposed people. We then came back to FINTRAC's mandate to look at how privacy legislation and FINTRAC regulation interact with one another. We looked at how you can report to FINTRAC if you're not a reporting entity, and how you can report to FINTRAC if you think reporting entities aren't meeting their requirements. And then we looked into the penalties for non-compliance and some best practices to avoid those penalties for non-compliance. As you went through the course today, we gave you some interactive activities, questions to solve, some links to explore, and some other activities. If you scored 60% or higher on the assessments, you'll receive a continuing education certificate within 2 days of completing this course. And at the end of this course, you'll see a link that will take you to your gradebook where you can see your specific score. We hope you learned a lot today. We look forward to learning with you in the future, and go ahead and check out some other offerings on the Continuing Education Library. Thanks, and have a wonderful day.